Ripple and Canton are huge players in this game and should not be ignored in regards to the ongoing fundamentals of this digital transformation.
Like said, where do you think we are in the crypto adoption cycle for this institutional standpoint?
First inning. So that's what's so exciting, because
I like that.
It's if you're a baseball fan, there you go. But it's really early on as far as where we're at, because again, you think about, we've just talked about DTC, 100 trillion, massive size. We're just piloting. We're just dipping our toe and testing that around, building on top of that. Now it may move quick. We may get from first inning to the ninth inning fairly quickly, but it's early on as far as what the potential is. And I think that's the way I would describe it. Is it's very early on the scale of where we think this can go. And so that's why it's very exciting. And why did we do Theramune, the pipe deal, in relatively a weaker timeline, right? There was much of stronger times in 2025 than when we launched this in November. And it was because this is the time to bring this to market, because this is going to accelerate as far as adoption and scale on top of it. And so that's why we went forward in bringing this to market, to allow investors to get access to it via publicly traded equity, and to participate in the growth and the excitement of what we think is happening real time, which is transitioning these traditional T plus whatever markets into real-time settlement, real-time mobility of collateral, to real use cases, and see that transition happen real time.
Alrighty, everybody, what is going on? Welcome back to another CYPRX video breakdown, deep research dive for you guys today. This is going to be a lengthy one. I have like 15 tabs open. We're going to be reading thoroughly through some bank grade documents from some of the largest institutional players in the crypto ecosystem. We're going to be diving into some Canton related fundamentals, some XRP related fundamentals, and really just honing in on this idea of what Mark here he's the CEO of Theramune, just said that we are in the early innings of this massive transformation. I want you guys to really take that into consideration, especially in regards to the current market landscape. We're in a risk-off backdrop right now. We're seeing sell pressure on altcoins across the board. A lot of people are losing faith. And I personally believe it's because they're not doing the right research. So here at CYPRX, we're always just trying to bring you guys the realest documented research from some of the largest organizations in the game. We're first going to be reading through, to kick off today's video breakdown, the Sygnum signal. Now, if you guys don't know who Sygnum is in this space, they're a large organization, a bank, a regulated entity out of Switzerland that operates heavily in the digital asset ecosystem. We've covered them before, but they just released this document titled Sygnum Takes on the Events, Trends, and Forces that will shape the global digital asset ecosystem in 2026. There's some phenomenal things that just signal such massive and granular adoption on the horizon for the digital asset ecosystem, and I want you guys to be locked in and pay attention to those things. So we're going to read thoroughly through this to kick off today's video breakdown, and then that will take us down the rabbit hole for the XRP and Canton related fundamentals today. So let's dive in. Starting off here just on page 1, we have the CEO of Sygnum Bank and his open remarks. And it says here, by 2026, token rails will move meaningfully towards becoming mainstream financial infrastructure. The shift won't come from a single breakthrough, but from steady industrialization. Banks, exchanges, fintechs, and custodians progressively embedding token-based custody, issuance, settlement, and liquidity into their core operations. We have been advocates of trying to show people for literally since the entire lifeblood of CYPRX that these financial institutions are for a fact going to integrate crypto specifically into their core operations. Now, that might be the last thing that really fully scales and takes place, but they are going to be holding, trading, and utilizing these digital assets across the board. It's just going to take some time. But here again, you can see that this is taking place. 2026 is a crucial year, he goes on to say, for these foundations to become a part of the default stack. The full transition will take 5 or more years. So he's not saying that this is going to be some overnight thing. And so think about it, 5 years. or more from now is 2030 and beyond. And we've always tried to give people a long-term horizon. But the strategic decision shaping that future is already being made. By the end of 2026, institutional momentum should become increasingly visible. The American Bankers Research shows roughly 50 to 60% of major banks will have invested in digital asset infrastructure, and approximately 25 to 30% will be live with custody and trading, and around 8 to 12% will be participating in stablecoin issuance or consortium. These projections build on the 2025 adoption surveys and early activity in stablecoin consortia, though actual adoption will depend on how quickly regulatory clarity and internal capabilities mature. As we progress, that is the only update that I wanted to briefly touch on in the onset of this, and it says here, now in 2026, it is likely that we will see a substantial rise in liquidity in institutional grade application designs, completed by a backdrop of regulatory clarity and protocols implementing economically viable tokenomics. Conditions are rapidly aligning for large-scale institutional participation. I like that sentence right there. Conditions are rapidly aligning for large-scale institutional participation. Remember, we have never seen an altcoin cycle where there's regulatory clarity and large-scale institutional participation where they have the green light to actually onboard in this space. I want you guys to keep that in mind considering the discount environment that we're currently operating in, not financial advice. Now, here, this is a little bit of a lengthy one, but it is a juicy read. It says, over the past months, with increasing regulatory clarity and governmental encouragement, we have witnessed both large, systemically important banks and smaller private banks and asset managers rushing to formulate their own digital asset strategies. Then down here, it says, this creates urgency for wealth managers and family offices. To put it plainly, first movers who adopt tokenized treasury solutions through established regulated providers stand to benefit from advantages in yield optimization and operational efficiency, unlocking tokenization. Institutions without existing blockchain infrastructure in place face a critical build or partner decision, and build timelines often stretch beyond 8 to 24 months. The 2026 threshold family offices making this shift recognize that their cash management toolkit now includes tokenized instruments, delivering superior risk-adjusted returns with institutional-grade infrastructure, with 90% viewing digital assets as important for long-term wealth preservation, and 86% believing improving regulatory conditions would motivate larger allocations. So just think about that right there. The family offices and the private wealth managers that were interviewed and surveyed for this report, 90% of them believe that digital assets are a viable investment for wealth preservation long term. So do you think they're freaking out right now about the short-term volatility in the crypto market with altcoins? No, they're probably seeing it as an opportunistic moment to get in at a discount. Again, just have that mindset shift right there. When you read the documents, this is why it's so important to be a part of a research-based community instead of a hopium or hype-driven community that's just constantly touting a bunch of bullcrap to you guys, because we pay attention to what's in the documents here at CYPRX. To end this report here, it says family offices making this shift recognize that their cash management toolkit now includes tokenized instruments with 90%. We read this again. It says, because it's double taking it. So it says it up here. Okay. And it reiterates that with 90% viewing digital assets as an important investment for long-term wealth preservation, and 86% again believing improving regulatory conditions would motivate larger allocations. 2026 marks the year tokenization stops being an alternative and becomes widely accepted as treasury practice. That is huge confirmation from a large player in this game like Sigma. Coming over here to the second document for today's read. This is by Amplify ETFs, Digital Asset Monthly Trends and Innovations Shaping the Next Generation of Finance. Large-scale products and investments setting up for 2026. I'm going to primarily focus on the two XRP portions of this article. So it goes on to read. The U.S. Office of the Comptroller of the Currency granted Ripple Labs, Inc. conditional approval to establish Ripple National Trust Bank, or RNTB, de novo, newly chartered National Trust Bank. RNTB will operate as a limited purpose national trust bank, emphasizing fiduciary services like digital asset custody, reserve management for Ripple's RLUSD stablecoin, and institutional payment settlement infrastructure. This is preliminary approval only, final charter requires meeting pre-opening conditions, including capital adequacy, minimum tier 1 capital, robust risk management governance frameworks, AML, KYC compliance, and insurance. So we definitely need to see this further continue, but this is still huge. So what are the implications? That's what I want you guys to pay attention to here, because this is massive for XRP. With federal charter status, Ripple can offer regulated custody and settlement services, integrating XRP more seamlessly into cross-border payments and treasury operations. Investors may see increased demand for XRP as it supports RLUSD and other institutional use cases, especially if Fed master account access for direct FedWire FedNow settlements is granted by Q2 to Q3 2026, eroding competitors' moats like Circle's USDC or Tether's USDT. So, huge time frame right there in this document. Let's start to continue to pay attention to this as we head into Q2 to Q3 this year in 2026. Then here it also says the OCC's oversight adds a layer of federal supervision building on Ripple's SEC victory, which could attract more institutional inflows. For investors, this mitigates risk from regulatory uncertainty, potentially stabilizing XRP's price and fostering long-term growth amid broader crypto traditional finance convergence. Now, considering it mentions stabilizing XRP's price, I wonder to what degree or what extent that price is going to be. Stabilize that, right? We can all have our predictions in the back of our mind. We don't give those predictions here at CYPRX, but it's interesting that they say that in this document. As Ripple becomes a crypto native bank, XRP holders gain indirect exposure to a compliant entity with banking privileges, which could drive scarcity via escrow locks and upside potential. So, huge announcements at the end of 2025 that are going to set the precedence for 2026 and years to come moving forward. Next, we have XRP and the utility, the DeFi aspect of XRP expanding. HEX Trust, a regulated digital asset custodian, partnered with Layer 0, a cross-chain interoperability protocol, to launch a wrapped XRP token, or wrapped XRP, on the Solana blockchain. This token is backed one-to-one by native XRP, held in institutional-grade custody, and is fully redeemable at any time for the original XRP on the XRP ledger. Long-term, it could boost overall XRP demand by integrating its deep liquidity into thriving ecosystems, fostering collaborations like real-world asset tokenizations, payments, and DeFi hybrids, and reduces the reliance on the XRP ledger alone for growth. The implications of this are, as you can see here, it says in January 2026, HEX Trust licensed custody with insurance audits and compliance. Wrapped XRP mitigates common bridge hack risks and appeals to institutions' positions in XRP as compliant multi-chain assets for institutional strategies. Then down here it says XRP holders. XRP's strength has historically been in fast, low-cost cross-border settlements on the XRPL, but DeFi activity there remains limited compared to Solana's high-throughput ecosystem. Wrapped XRP enables holders to deploy their assets in the Solana's lending protocols, liquidity pools, perpetuals, and yield strategies without selling. We have been a firm advocate here in the CYPRX Wealth 28 Club of trying to show people and teach them strategically how we never have to sell these digital assets that we've been spending years, literally countless years. I've been an investor in XRP since 2016. It is still to this day my biggest bag in terms of value. I never want to sell it, if I'm being completely honest. I would like to set it up in a trust, pass it on to my kids, and then maybe just earn yield and take the yield that I'm earning on my XRP while, my XRP is sitting at whatever said price in the future, but never having to sell it, okay? Because I'm definitely not selling it for fiat currency. That's for dang sure, right? This directly increases XRP's utility, potentially driving organic demand as users wrap more native XRP to access higher yields and trading opportunities. So I found both of those continued developments around XRP to be of interest, considering I am an XRP holder and will be likely for a lifetime. It's either going to go to zero or one of these dang moon boys is going to be right one day or the other, right? So moving on. Huge announcement today. CZ BNB posted this. This is bullish for crypto and crypto exchanges. We've seen some other influencers already make some videos on this, so we're not going to read this in too much detail. But we are going to check something out over on LinkedIn that involves the Canton network. New York Stock Exchange announces a new tokenization platform. This is honestly massive, sets the precedence for traditional finance to really come in to the tokenized arena. New York Stock Exchange announces 24/7 tokenized securities. This is from Mark Booman from the 51 Group, is the CEO over there. And he says here in this LinkedIn post, this is the single most important event in the history of modern capital markets. Wow. We are watching the $80 billion average daily volume of the world's largest exchange migrate to the blockchain. Now, what I want you guys to focus on is down here where he says, and this is where we're going to start to dive into the Canton fundamentals. They're preparing every single one for 24/7 operations, including tokenized deposits with BNY and Citi. A week ago, BNY went live with tokenized deposits for 6 initial clients: ICE, who owns the New York Stock Exchange, Citadel Securities, DRW, Ripple, Bailey Gifford, and Circle. Now, I showed you guys in a previous video breakdown how this BNY digital asset platform has everything to do with Canton. So if we come over here to this thread, if you guys did not watch that previous video breakdown, just to show you guys, this is a very lengthy thread. Took me like literally over an hour just to write this one post and do the research for you guys. But coming right down here to show you all in detail that this is and has everything to do with Canton, BNY's digital asset stack looks like this. BNY's digital asset platform, private permission blockchain, tokenized deposits, tokenized money market funds, programmable cash, collateral, and margin workflows powered by Goldman Sachs digital asset platform, GSDAP, that is built on the Canton network by Digital Asset and is used by Ripple Prime as an early adopter, Anchorage Digital, Citadel, Galaxy, ICE, Invesco, Wisdom Tree, so on and so forth, right? And so in the documents, just to show you guys that this is for a fact to be the case, here you can see Goldman Sachs and BNY have announced the ability to tokenize the $7.1 trillion money market industry on Canton. BNY clients can now access tokenized money market funds with ownership recorded on GSDAP, built on the Canton network. It says it right there. Then if we come over here to this part of the post, you can see right here, it says BNY will deploy blockchain technology developed by Goldman Sachs to maintain records of customers' ownership of selected money market funds. This combination solution marks the first time in the US that fund managers have enabled subscription for shares of their money market funds via BNY's Liquidity Direct and digital asset platform, the corresponding value of which will be represented through mirrored record tokenization utilizing GSDAP. It says it right here. BNY's digital asset platform mirror tokens of the MMF shares are created utilizing GSDAP. That's Goldman Sachs digital asset platform. And I just showed you guys right here, Goldman Sachs digital asset platform. You can see the direct screenshot from the Canton Network's website. The combined solution, BNY and Goldman Sachs launched tokenized money market funds, will leverage Goldman Sachs DAP built on the Canton Network, July 23rd, 2025, right? So I found that to be of interest in regards to this announcement with the New York Stock Exchange. Ripple and Canton are huge players in this game and should not be ignored in regards to the ongoing fundamentals of this digital transformation. Now, as we continue to progress, this was a massive post that I feel like did not get enough attention, especially considering that gold is continuing to trade at new all-time highs with these ongoing geopolitical tariffs and uncertainties that are circulating in the market, driving demand for safe haven. No hype, no made-up connections, no fluff. I said here in this post, is it really a coincidence that gold is hitting new all-time highs at the exact same time that institutions are tokenizing gold? For decades, gold has been one of the most trusted stores of value on earth. Now, that same asset is being built for the digital financial system. Major banks are no longer just trading gold, they are turning it into programmable blockchain-based financial infrastructure. HSBC has already launched tokenized physical gold using distributed ledger technology, allowing gold to be issued, owned, transferred, and settled on digital networks. These are not experimentations, these are product-grade systems being built by global banks for institutional investors. Now check this out, okay? Here is the document directly from HSBC. It talks about how HSBC is at the forefront of this revolution, being the first global bank to offer tokenized physical gold to institutional investors using DLT. Now, if we come over here in this little tiny screenshot, okay, you can see it has the customer journey, gold tokens crossing DLT interoperability rails. And what I want you all to really focus on is here it goes on to talk about HSBC Orion Gold DLT to public permission DLT run by the asset manager. So it talks about this Orion Gold tokenization platform, says it right there. Okay. Well, if we come over here, HSBC in this Canton post, the group head of digital assets and currencies at HSBC said this: driving liquidity in digital asset markets requires ecosystems with strong connectivity and market access. Joining the Canton Foundation will help HSBC to continue to contribute to a shift toward infrastructure that can support complex multi-asset transactions with trust and transparency. Now, we know if we come over directly to the Canton Network ecosystem, HSBC sits right there on the Canton Foundation. Now, when we look over here to the left-hand side, you'll notice this company called HKEX Synapse. All right, so we're going to click on both of these and kind of go down this rabbit hole. Coming over here, it says HSBC is in multiple Canton applications. So if we click on the HSBC More tab right here, it takes us over to this page. And right here it says, HSBC, provider of HSBC Orion. HSBC is also connected to Canton native applications like HKEX Synapse and participated in the RSN, RLN, and other Canton-based pilots. So noticing this HKEX Synapse in collaboration with HSBC, okay, we come over here and I ask the question because if we go back to this HKEX Synapse platform and we click on it, it says HKEX Synapse is a DLT settlement acceleration platform using Canton technology. Then I came over here and I asked AI the question, what does HKEX do for HSBC Orion? Check this out. HKEX, or the Hong Kong Exchanges and Clearing, doesn't directly do things for HSBC Orion. Rather, HSBC Orion is a HSBC digital ledger technology platform for using digital bonds that interacts with HKEX's infrastructure, especially its Orion Market Data Platform, OMD, and Orion Cash Platform, which allows HSBC to list these digital instruments on HKEX markets, leveraging HKEX's reach and integration for broader investor access. HSBC Orion acts as the issuance DLT layer, while HKEX provides the regulated exchange. We know HKEX Synapse, coming back over here, is a DLT settlement acceleration platform using Canton's technology. Canton just posted this January 19, 2026, in regards to John O'Neill, the group head of digital assets and currencies at HSBC, as to what he just said. So I don't think that it's all by coincidence. It's all an interconnected web, and Canton is 110% playing a role in it. The last document that I have for you guys today is this Citi Quantum Threat, the $1 trillion security race is on document from January 2026. Again, shout out to the researchers for these documents. They're always constantly dropping gems inside the private CYPRX Discord. If you guys want access to any of the documents and research that we've covered today, you guys can always lock in with us by heading over to cyprxtrading.com and joining the private CYPRX Discord. There's literally hundreds of research-based documents from some of the largest organizations in the game. To end this here, I found this to be so interesting because it talks about the quantum threat and vulnerable systems and how they must move to quantum-safe alternatives. Well, check this out. This is directly from Citi, and it says, quantum readiness starts with a clear sequence of actions that identify exposure, prioritize critical systems, enable agility, guide migration, and sustain long-term resilience. Then if we scroll right down here, it literally calls out Bitcoin, Ethereum, and Solana all in one statement. In blockchains such as Bitcoin, public key exposure only applies to a subset of coins, about 25%. For other blockchains, the majority of the coins are vulnerable. For ETH, over 65% of the current supply is vulnerable to quantum attacks. For Solana, it is effectively all the supply at risk. Not surprisingly, public key exposed chains are planning migration paths already. Then, if we scroll right up here, what does it mention? It says these newer blockchains can move faster and are less vulnerable. Well, if we come back over here to the Canton ecosystem, what do we know?
In terms of who's using it, well, in addition to some of these household financial institutions, there are 400 other institutions who aren't listed who are using it. And there are also companies like BP and Microsoft in other sectors who are leveraging this privacy first and institutional grade control to build and make it a network for more.
Citi is an active participant in applications on the Canton network. It settled the first trade on the HKEX Synapse platform. So the way that I see it is Citi directly in their documents is comfortable enough saying that Bitcoin, Ethereum, and Solana are vulnerable and that faster and less vulnerable blockchains are much better. And here you have Citi directly mentioned as an active participant in the applications on the Canton network in the Canton ecosystem. So, with all of that research in mind, that is it for today's deep dive. We're going on to roughly about 25 minutes on this call. So, I will wrap it up here. As always, bringing you guys some of the realest documented research in the game. With that being said, be cognizant, be aware out there. Remember, none of this is financial advice. I'm not telling you guys to go out there and buy Canton coin or XRP. Always do your own personal research. If you guys want to know where to find all this research at, you guys can head over to CYPRXtrading.com. We have literally thousands of documents from the largest organizations in the game in our private CYPRX Discord. We'd love to have you on the team in 2026. If you enjoyed, smash that thumbs up button and subscribe, and I will see you guys in the next video breakdown.